Hi, everybody. Happy Tuesday and happy Valentine's Day to everybody. We're so glad y'all are here for our final Tiny Talk, except for the grand finale, which is Friday and Saturday. And have a little mixed emotions. It's been really fun getting together with everybody for 4 nights a week since October. So it will be sad to see everyone go, but I'm a little relieved because I'm a little tired. But other than that, we're glad y'all are here. Robin's laughing. Anyway, we are recording you guys. As you know, my spiel, we're recording you so that we can put our recordings into the member portal for our members to watch at a later date. And also, we just want to also put out our disclaimer that any opinions stated here might or might not be the opinions of NOAA Certified. If you guys have any questions at all, you can put them in the chat and I'll read them for you, or you are welcome to raise your hand and you can ask your own question. And with that, I'm going to turn it over to Robin. Thanks, everybody.
Welcome, welcome, welcome. Happy to have everyone here. And yes, this is, I believe, number 65 of these Tiny Talks. So we are really excited about having Kendall Phillips on from Liberty Bank of Utah. I've known Kendall for quite a few years now. We've been working together on a lot of different levels. And starting from his concept of what he wanted to do to actually bring it into fruition, tweaking it a little bit along the way. So we really love what Liberty Bank has brought into the tiny house industry, and happy to have you on, Kendall. Do you want to say hi to everybody and tell them a little bit about yourself and who you are?
Absolutely. And thank you very much, Robin and Leanne, for the invite on this. I very much appreciate that. I've actually invited Carolyn Smith. She should be joining us. She's having a little bit of technical difficulty, so she should be joining us shortly, and she's trying to get in. But I've been involved with tiny homes since 2015. I'm the president CEO of Liberty Bank. I was introduced to tiny homes by mistake, actually, and I really fell in love with it. When Robin asked me if I could to talk this week and to do a seminar on financing, Friday and Saturday didn't work out. And I said, well, because it's Valentine's and I love tiny homes so much, let's just do it on Valentine's. So I really appreciate those who are sacrificing to join us on Valentine's, and I want to be able to answer your questions. I'm not going to really bore you with my details because I want to really find out about you. And I have a little presentation I kind of want to go through. And then if we have any questions, you feel free to ask during the presentation. I really want to make sure it's open dialogue and it's a two-way conversation. I hope to get through everything. And I think, Robin, we have an hour. Is that right?
Yeah, we usually try to keep it within that hour time frame. So yeah.
Okay. So with that being said, I'm going to go ahead and just pop right into this. Can everyone see my screen?
Yeah, I think you're up and it looks good.
And then for advancing, how do I advance on this? I'm sorry.
You can either do your down button or you can use your mouse if you have a scroll thing on your mouse. So there you go.
Got it. Okay. Sorry, I just had to do a little test drive right there. So we started this in 2015. Our emphasis is affordable and obtainable financing. We like doing tiny homes, and we like to do tiny homes coast to coast. So I'm going to go into some more detail on that, but I just wanted to kind of introduce myself from a very high level. This is my special message for Valentine's: romancing a tiny home buyer. So hopefully you guys are able to really, and I didn't go into this as as a tiny Tinder type of approach, but if you like it, continue to swipe it. And I know that part of the AAA of marriage counseling is appreciation, attention, affection. And I think that really ties into tiny homes, especially when you are trying to be simple. It's a simple alternative. It's affordable and obtainable, and it's flexible, and it's very portable, and you're able to have some multi uses with it. And of course, you have to be aware of the small print. Like anything else, beware of the thorns. So I'm not going to expand on this, but hopefully we can enjoy the Valentine message on this. The challenges in the tiny home building industry, as you know, the interest rates are continuing to be a challenge. Affordable, obtainable. The final placement spot is a challenge. Qualified, interested buyers. And then it's just the normal, effective, profitable execution from the sales agreement to completion to completing it on time. And that's a really small, tiny home. So hope you guys enjoy that. The prime rate is at 7 3/4. In 2022, we had 7 increases, total of 425 basis points. 2023, we've had 1 increase. CPI was announced today. It was an increase of 0.5 up to 6.4. It's dropped down since August of 2022. Our prime rate will probably increase again in March. The Fed meets in the 21st, 22nd of March, so you'll probably see the prime rate go up another 0.25%. I think we're to the point where it's going to be coming down, and that's my personal opinion. So jobs numbers were up in January, which was a very positive thing for the economy. So we'll continue to watch what's going on with the interest rate, but obviously that affects everyone's affordability in a lot of different areas. And Leanne, if you have any questions along the way, feel free to interrupt me. Okay.
Yes, sir. Thank you so much.
The types of loans, first of all, there's types of loans and there's types of institutions. There's a secondary mortgage loan, there's a home equity loan, and then there's a consumer loan. You can finance a tiny home with all 3 of those products. Obviously, you can if somebody's paying cash is king, and so obviously you want to be able to open up 2 different realms of financing. There's mortgage companies, there's banks, there's credit unions, and there's consumer finance companies. So there's a lot of different options out there. So hopefully at the end of the day, this is going to be informative enough for you to make a decision as to what's best for you and your customer, and just trying to figure out and navigate that. Typically the down payment is 20% plus the DMV taxes and bank fees. We have down payments. Our typical down payment is 15%. So you're in that ballpark of 15 to 20%. Our terms are 5, 7, 10, 15, and even out to 23 years. Minimum FICO score is 680. We have fixed and adjustable, and the rates vary from 9 to 14.5%. So just going back on the last year environment where the interest rates have increased 4.5%, it has been a big change in the marketplace. So we're hoping to see an ease on interest rates for everyone. It's tightened up the industry, it's tightened up production, and obviously we want to make sure that gets back to affordability. There is a difference between consumer financing and 30-year fixed rate mortgages. 30-year fixed rate mortgages are sold on the secondary. They're packaged and pooled into pools through Fannie and Freddie Mac. So there's different options. Just to FYI, these are not mortgages. They're not attached to real estate.
Hey, let me ask you a question there, Kendall, before you go too far along. You say there's different terms, 5, 7, 10, 15, 23 years. That's quite an array, and obviously every situation and every person is going to be different. Do you see most of your loans falling into one particular area a number of years as opposed to any of the others? What's your most popular one?
So it's really risk and return in regards to from the underwriting perspective and the pricing, as well as from the borrower's capability of qualifying. So a 5-year loan, you're going to see a higher monthly payment versus a 15-year loan. So the shorter the duration, the higher the payment is. And so there's an advantage of going with a shorter term rate, a shorter term loan. It's cheaper versus the longer term. So sorry.
No, that was Leanne's phone.
I'm sorry. I unmuted myself because I do have a question.
Yeah, no.
All right.
Well, let's finish up on this one here first, Leanne. So I guess what I'm trying to say is, yeah, the 5-year loan is gets paid off quicker. You're done, and that kind of a thing. So I didn't know whether there were a lot more of those, or if the 23-year term is what a lot of them are happening, or if there's a more popular one. And really, it's not up to them to choose. I mean, they could, but I guess the bank looks at everything and says, okay, you would fit into this program here, and we would be happy to lend you this make this loan for 10 years based on all of the details that we got from you. So then the follow-up question is, let's just say we get approved, or somebody gets approved for a 15-year loan. Is there any kind of prepayment penalty, or can you pay more on that and get it paid off in 5 years if you want to?
Yeah, there's no prepayment penalty on this. And typically, if they qualify for a 15 or a 10 or a 7, we would give them the option to say, hey, here's the different options between the 15, 10, and 7. And then they get a pick which one is going to be the best fit. So like I said, the shorter terms, I mean, there's really different there's different borrowers, and with have different strengths and weaknesses, and obviously there's all kinds of varieties in that. So we try to really let them pick and choose what would be the best for their particular credit circumstance.
Yeah, go ahead, Leanne.
So Jacob is asking, is this like a personal loan or like a car loan? How does the collateral work?
So it is a personal loan, and we do use the tiny home as collateral. It's like a title loan. That's a good question.
Another question I have is, I noticed that, back when the interest rates were low, rates were, varying from 7% to say 12. I don't remember the numbers exactly. And but I'm just amazed that interest rates have gone up 4%, but you guys have only gone up 2%. So if the prime rate's at 7 and you're at 9, that's only 2 points that you guys are getting, as opposed to maybe in the previous years you were getting a little bit more. So I just want to commend the bank for holding the line, even though interest rates are going crazy.
In this whole economy, with the interest rates going up, also to combat inflation, we still like the affordability aspect of this. So it's a good product, and I think the people that are buying tiny homes from good builders, as yourself, there is a definite need out there. So I just I think it's a good product, and it's a good borrower niche. So what is the process to pre-qualify a client? And we're looking, and this is where this gets into Carolyn's expertise. Carolyn, are you there?
I am. Can you see me?
I can. I'm going to let you take the slide, and I'll let you take it from here, because I really think some of the questions that you can address will be really beneficial. So.
Absolutely, I'm happy to. What was the question?
Everyone, this is Carolyn. And I don't think there was a question, but I think the question is, what is the process to pre-qualify a client? And that's
Absolutely.
the screen that we have. That was the emphasis of this screen.
Okay, well, everyone, I'm Carolyn. If you do anything with tiny homes, you're definitely going to talk to me at some point. You and your clients. So to get pre-qualified, what happens first is they can go on the bank's website, or they can go on the builder's website and click the job form, and that gives them the application. Once I get that, I send them a link that tells them what all information we need, and they can upload it right there to the secure site. We'll need 2 of the most current paycheck stubs that they have, 2 of the most current bank statements, 2 years tax returns if they're self-employed, W-2s if they're not, and their ID. Once I get all of that, I can kind of determine whether or not they can get approved, and we'll go further and find out the job history, where they're going to park the tiny home, how much the lot rent's going to be. We put the paperwork together, and then we determine how many years they want to go and what that rate would look like.
May I ask a question?
Sure.
Many of the people who are interested in tiny homes are retirees, and so their only income is Social Security. How is that handled?
We just get a copy of their Social Security award letter. And the good thing about if they have Social Security, we can actually increase their Social Security by 115% and give them credit for more than they actually get. So that helps them qualify. So the only thing they have to have if they get Social Security or some type of pension is just a letter confirming that they get that.
Carolyn, we have a question. I see. It was talking about making it a personal loan, but with the house as collateral. Can you say, one of the questions is, who holds the title? And then can a title loan be sold on the secondary market?
We hold the title. And typically our loans are not sold on the secondary market. Any loan can be sold, but we hold our tiny homes. We service them at the bank.
So that's kind of a follow-up thought for me. In other words, you guys have a finite amount of money that you can lend out. Does that ever get to a point where, hey, we're going to run out of money if we keep lending on these tiny houses, or do you have plenty of backing and funds to do these loans?
Well, these loans tiny homes are very inexpensive. So therefore, yeah, you're doing a lot of tiny home loans, but they're also paying off at a rapid rate. So right now we're okay. If it ever comes to that, we can look into some investments and stuff like that. So we're okay.
You know, it's interesting. You would compare the tiny home to a mortgage, and a mortgage. Someone typically has a mortgage for at least 7 years. We're not seeing that in the tiny home space. They're paying off sooner than 7 years. But at the same time, there's no prepayment penalty, and there's all kinds of flexibility, obviously, with it being a title loan. Carolyn, you want to take the next slide?
Absolutely. Trust in the sale. You've got time and money time frame for completing the build? Is it realistic? When they go and talk to the builder, they're going to ask, this is what type of home I want. This is how big I want the home, all the different upgrades that I want. Can you have that done, and when can you have that done? If they're over promising, then you need to stop and think, is this realistic? Is it too good to be true? Because you don't want, and you definitely don't want to overpromise as a builder, because people especially with social media, can really hurt your business if you go in there overpromising and then under delivering. So you have to be careful about that. Cost to build is it with a win-win, unknown variables, padding. We have one specific builder that always puts a little padding in his just so that he don't have issues at the end. So that seems to work for him because, with the price of stuff going up every day, you never know what's going to be the end result. So you don't want to lose money when you're building, for sure. What is included, what is not included, and non-negotiable. So I think as a consumer, just like myself, you want to go in there and you want to know exactly what you're getting for the price. And, builders have to stand their ground and say, again, not overpromising and saying that they can do things that they can't do. We have to have the VIN number, the make, the model, the year that the unit is built versus the resale. Manufacturers now can say if they sell a house in 2023, but it is called a 2024. If you're a manufacturer, you can do that now. If you're a builder, you cannot. So we have had a learning curve with that last year, where we had one that came in to close in 2022, but the title called it a 2023. So this is always changing, and we're having to change with it. We're learning as we go. Total purchase price, you want to know what all is included. You want to know if delivery is included, if they're trying to include sales tax with it, because prior to us doing our sales tax ourselves and titling, that was something that they were including. Down payment, we were taking the down payment as a whole. We took the price of the home, we added the bank fees, the title and taxes, and then the down payment off that total, where now we do the down payment just off of the price of the home, and the other fees are due at the end. And that gives people time to come up with that money at the end, and they don't have to finance those fees in and pay interest on it.
Hey, Robin, what's the
Okay.
normal time frame to build a tiny home that you're seeing? Would you still say it's 3 months on average?
Yeah, I would say 3 months. We have had some builders that really knock them out faster and some that go slower. One of the things that we're finding is the smaller builders with a couple of guys should be able to knock one out in 3 months. We've seen, we looked at one last night that just got a contract for 20 tiny houses, and in our system, they're already on number 4 or 5, and they've wrapped up 2 of them. So it really depends on the manufacturer. We require a manufacturer to at least build 2 in a year. So even if you're a manufacturer just doing it part-time, you should be able to do 1 every 6 months and get 2 done in a year. So it varies, but a good number is, yes, 3 months. You should, depending on how big and how complicated it is, you should definitely be able to finish that house in 3 months.
Great. Carolyn, do you want to go into the inspection process? I mean, this is.
Can I interrupt?
Yep.
We have a couple of questions. Can I interrupt?
Yep.
Jeffrey, are you there, Jeffrey? There you are.
Yes, I'm here. I was muted. Question would be, if we're gonna fee financing and build as we go, how are the land home packages? If we find an acre or two, they're rare here, but I found some. Some are even owner carry, whatever. But my question is, if we can get the acreage with the utilities to the property line, secure that acreage, and then start building, will the loan allow for that, for the initial purchase of the land, with you holding the interest, holding the I guess the rights to the sale until it's been completed? If that makes any sense?
Are you referring to a construction loan?
Pretty much, yes. I guess that's how it would be structured.
Yeah, that's what I thought you were talking about. Well, right now we're working on our first construction loan, so it's in our very early stages of it. So we're not offering that to everyone right now. We are working on it with our seasoned builders. So that is not something that we're doing currently.
So
Right,
Jeff,
because what I'm finding in the Treasure Valley, which includes Boise, Caldwell, Nampa, Meridian, is the resistance of RV parks to tiny homes. I mean, stiff resistance. Even though Boise has approved many tiny home individual and communities, Boise's mayor is on board, as I'm talking to a new friend that was a builder for years in that area, has now since retired, but stays involved in the tiny home. He's getting ready to build some tiny homes behind their church on an acre. And so I've befriended him through our church. And again, when we start these out, and the only place for them to go until they purchase their land, i.e. our customers, is an RV park. But I have yet to find one. I've talked to many that will even allow a tiny, I've tried to fully explain to them what a tiny home is, and they're just so resistant to it, and I don't know why.
Yeah, I don't know either. I can tell you what what one of our builders does is they buy. Are you a builder?
Contractor, yes.
Okay. I can tell you what they do. They go out to different areas and they buy up a good bit of land. And then when they sell the tiny home, they do, they don't sell the land to the customer, but they rent it to them, but they have to pay like 10 years of rent up front.
I see. Okay.
Yeah, so
my
that
initial
gives them the money to purchase that land.
Right. My initial thought was build the tiny home on what property is actually ours as a family, sell it, and then prepay 3 to 6 months in the sale of their rent and RV park. But again, it's going to have to be something different. And maybe what you mentioned is probably the wisest idea, because having so much resistance at RV parks, and man, that's kind of tough. Now, I haven't talked to every RV park in the Treasure Valley, but the majority are saying no tiny homes, not in my backyard attitude. So.
Gotcha. Which is the way they used to do mobile homes. That was the way they used to do mobile homes.
Right. And very few mobile home parks have an RV license. Here, you have to be zoned as a mobile home park. You have to have a dual zoning. One's RV park / mobile home park. And they have up to 4 months to 4-year waiting lists. It's just insane. This Treasure Valley is exploding in growth. And that's why I'm really excited about the tiny home concept here in the Treasure Valley.
Yeah. Well, I would look at doing it that way. I would go out there and buy some land or use your family land and then get them to pay, $20,000 down to rent the land. And that gives you the money to pay for it and you still own the land.
Correct. It may be what we have to do here, because I'm not giving up. I'm going to stay full steam ahead.
Good.
Yeah. So I would recommend that you keep those two separate transactions, building the tiny home versus renting the land.
Right. Because I'm not sure there are ADU requirements here. I know many places are approving those, and it could be considered an ADU in many places in California and the state of Maine. But here I have to check into that. And so I've just now got in with this gentleman, and he is very good friends with the mayor of Boise. So I'm in the beginning stages of finding more out that I can find out, and I'll share with you on Zooms as I gather intel and info. I'll share with you all.
So at the very beginning of the presentation, we had financing THOW, and THOW is Tiny Homes on Wheels. There is a specific niche for ADUs. But for purposes of what we're focusing on being titled loans, this is for tiny homes on wheels.
Right, right. And a lot of ADUs are also on wheels as well. And
Yeah.
the definitions of all these vernaculars drives me nuts. But in essence, I agree with it because they're so mobile, and even with Boxable and other companies, they are on wheels. And if they have to be moved or delivered, they're on wheels, and we can do it with a pickup truck.
Exactly.
Right.
Carolyn, we've got to pick up the tempo. So do you want to take the next couple of slides, and
Sure.
we just need to accelerate a little bit more?
Inspection of the tiny home. Once the builder tells us the tiny home's ready for inspection, we send an email out to NOAA, or the third-party inspector that we would be using at that time. They contact the builder. We get photos of the inside, outside, the VIN number, and we make sure, or the inspector makes sure it's built to ANSI, NFPA or IRC standards. A copy of that report is then sent to us, and we also provide it in the closing packet to the borrower.
And we want to thank NOAA for all those inspections. So thank you very much.
Absolutely. And they're very quick at it. Funding the loan. We get the insurance. Again, once we find out that house is built, we tell the borrower they need to go ahead and get the insurance. I will tell you that the one we see the most is Strategic. A lot of people give people a hard time looking for insurance. They are the one I see the most. We verify their down payment by the builder and by the borrower. Make sure both parties see that the down payment was paid. We confirm the DMV fees, inspection of the tiny home. We receive that from NOAA. Verify the VIN number with the MCO against the inspection report. We call the builder. We get a copy of the insurance for the transportation company, and if they've got an agreement, we get that as well, just to make sure that if something were to happen in transportation, that home is covered. We update the credit report and the financials of the applicant, making sure that they're still employed at funding and closing, and make sure that if their credit has gone down, then that builder has the right to go ahead and close and do a holdback on that, but that's part of the builder closing package. We sign the closing and we wire the funds. Why approved builders and manufacturers? We will finance new and used tiny homes. The difference in the used ones, they do have to have a 25% down payment if it's a primary residence for us to do used ones, and they have to be built by one of our approved builders. Even if that builder isn't the one selling it, if it's been sold by an individual, they still have to prove who built it, because we want to make sure that they were built to the right standards. Safety, durability, and marketability is what we want to make sure that these homes contain, and that they're increasing in value.
Also, I want to thank NOAA for those reports on used financing tiny homes. So
absolutely.
Thank you, NOAA.
What makes an incredible manufacturer builder in the tiny home industry? I think we all have to kind of love the tiny homes to be able to even do this. So you need to love the trade and educate others about the industry. You have to have built tiny homes for 3+ years so that you know how to build them to where they do sustain the test of time. Personal knowledge, professional knowledge on products and code requirements. The 5 C's: collaboration, coordination, communication, cadence, and consistency. We want to make sure that these houses are very consistently built, that they are built by code, and that we don't have to worry about them. Regulations, knowing it will catch up to the best standards like the Model T. The tiny home industry is still in the infancy stage. It is not a matter of if, but when. Things continually change on these tiny homes. The codes change. where you can park them change. And I can see in the future that you will be able to get loans through Fannie Mae, Freddie Mac for these, just like you did with mobile homes. It's just going to take time.
Going back to the best standards in the industry, they're constantly being defined through different trade group industry standards, and kind of like the Model T in 1908, the Model T did not have a seatbelt. That came a lot longer after the Model T was out. And of course, now we have electric windows and heaters and defrost and all kinds of other fancy gadgets, but it's evolving, and so is the tiny home industry. So I thank the builders who are striving for best standards.
How do I become an approved builder? The required documents is the non-disclosure agreement, the builder questionnaire, a brief story of the company, owner and corporate documentation, current financials and previous 2 years of tax returns, insurance certificate showing a summary of coverage, builder vendor list, trailer, lumber, window, cabinets, appliances, supply chain and business recovery plan, disaster recovery plan if available, privacy and HR hiring policy, background checks, etc. Do you outsource any services to a third party, electricians, plumber, etc.? Authorization to pull credit. I will tell you why we try to vet the builders is because we've had so many folks, just like with anything, they see an industry, a new industry that's starting up, they will get on the bandwagon, open up a website, snatch people's down payments and close their doors. We're just trying to prevent that from happening as best we can. Common questions: am I able to have some add-ons or upgrades to the tiny home? You absolutely can. Am I eligible to receive a grant or gift from a family member to pay down the down payment? The only grant that I am aware of, there could be others, but I'm aware of Operation Tiny Home. We have had customers use that grant. It's a great grant. You definitely can get a gift from a family member. Do you finance tiny homes on foundation known as ADUs? We do finance ADUs. What happens if the client does not qualify anymore after the pre-qualification? That is what I explained a little bit on a few minutes ago. When you sign up, you sign what's called a holdback agreement, and that tells you a percentage of money that we would hold if your customer, your client didn't no longer qualify at the end, that we would hold a certain percentage of your money as a holdback until that loan is performing.
So on that note, when you have a contract with a borrower and the borrower is putting down 20% and you have to complete it within 3 months, and then the borrower doesn't qualify anymore for some reason or another, it doesn't happen very often, but it has happened. That's where, at that point in time, you can negotiate by selling that tiny home to another person, and then the borrower may be able, according to your contract, may be able to keep the down payment, or you give the down payment back. But obviously, we want to make sure that we pre-qualify these borrowers, and at the end of the day, when the building is completed, we want to make sure that the borrower and the builder have a win-win in that. But if there is any circumstances during the time of construction, that's where it's a challenge.
Can you develop that just a little bit more, Kendall, because that might be a little confusion going on in the builders' minds right now. In other words, what I'm hearing is that there's this agreement that the builder signs, the tiny house builder, that if their buyer does something so that they're not qualified, that you'll maybe still make the loan, but hold back some of the money that would normally go to that builder at closing, until that loan is performing. Can you tell us about how much you hold back and how long does it take before you say that that loan is performing?
So typically, and again, this gets into a very small percentage. So when a borrower is presented for time of pre-qualification, and of course we want to see all of our loans pre-qualify and with an adequate cushion, and then that borrower goes in and puts a 20% down payment with the builder. That borrower is committed to the builder goes forward and says, yep, I'm going to build the tiny home. If there is an issue where the borrower goes out and buys a car or loses a job or has other types of employment disruptions or whatever, and then that loan doesn't qualify, then the builder has an option of taking on more risk with a holdback. But typically, I would say 99% of the time, we do not see those holdbacks. Typically, the borrower and the builder would work out another plan, so it wouldn't end up to a holdback. But if the builder feels comfortable with that holdback, and let's just say it's 3%, and as opposed to selling that tiny home to that one particular borrower, they could agree with the borrower to give them back the 20% and resell it to somebody else. So it allows for some discussion under the circumstances when the borrower doesn't qualify during that 3-month time period. It has happened. It doesn't happen very often. And that's why we're striving to make sure that there's options available at time of when that occurs.
Yeah, that's good. And that's helpful too, because if it's a small amount, 3% or somewhere in that range, that's the builder's profit. He still has enough money to pay for his labor, pay for his material. And so he should have, at least, that much in profit. So some of his profit might be held back until that loan is performing. And then also to have the option of say, okay, Mr. Buyer, you don't qualify anymore, so I'm going to take the home and resell it. Of course, I'm trying to look at it from the standpoint of a builder saying, I don't want to have to resell my home. I want this guy who's already qualified to take it so I can go on to the next one. I don't want to have to find another buyer. So that 3% holdback might not be, or whatever it is, you said 3% might be a possibility or somewhere in that range. That's not the end of the world, because I can still get enough money to pay for my material and labor and go on and build the next one. So that's the only thing I wanted to clarify. It might scare some builders, this holdback thing.
So,
But it's not 3% of the cost of the home, it's 3% of the loan amount.
Oh, that's less yet then, because if you got 20% down, it's 3% of 80%.
Yeah.
So again, at the end of the day, we want to see this as a win-win for the borrower and a win-win for the builder. And so that's the reason why we have these discussions in language. So in case that does happen, and then the builder, the manufacturer should also be aware of how unique they're making the tiny home. The more custom build it is, I mean, if you're adding a chandelier and a jacuzzi and all kinds of hot pink colors, not against hot pink, but I'm just saying if it's less marketable, then it could be a little bit higher risk. So we allow that discussion to take place between the borrower and the builder.
I have a question. Well,
Yep.
Jacob has a question. Can you finance homes that are new but already built and inspected by NOAA, or does the customer have to be involved from the start of construction?
So we absolutely go back to our approved builders, and that's really important for us. We also lean on NOAA to make sure that we get an update inspection on a used tiny home. And we also involve the borrower, and it's based upon not only the credit of the borrower, but also the collateral. Carolyn, did you say?
Can I add something to that question?
Yes.
Just so if I become an approved builder and I just lay out the cash and I build 10 homes and they're done, ready to go, and a buyer comes to me and says, "Can I get this and I want it financed?" I could pass them off to you, and then they get their financing on that home that's done sitting here on my lot? Or does it
Yes.
have to be like custom from the beginning sort of thing?
No, we can do it that way. Absolutely.
Okay.
The 10 commandments of buying and financing a tiny home: have a job, have income stability, save money and know thy down payment, pay your bills and have good credit, have your debt to income ratio, know the intent of use of the tiny home, beware of good quality building practices, strive for safety, durability, and marketability in the tiny home, know the placement spot. Character and integrity goes a long way. Review the list again. Rinse and repeat. You want to just keep on, because sometimes when you walk in and see something you want, you just purchase it and then have regrets. You need to really, really think about what you're doing. And you want to make sure that you're with a good quality builder. But for us to finance it, these are the things that we look for.
Hey, Robin, I think we're looking for Noah and the Ark pictures. I think we're gonna have to change that, maybe put two animals in side by side in the Ark or something. I think we're gonna
Right,
have
going up into the yard, that would be great. Yeah,
Yeah.
absolutely.
this,
Yeah.
this slide. Was there questions on that?
No, but I certainly
I
think
have
that's a good Valentine's Day statement is, love your tiny house.
That's right.
I have a quick question. A lot of this is talking about like individual buyers buying like one home. Do you guys do any lending for developers? Let's say somebody that is doing like an Airbnb park and is trying to get 10 or 15 units. I know since it's a personal loan, or more like a personal loan, that you're limited on how much you want to lend, versus if a developer is buying real estate, they can get loans based more off the collateral than off their personal income. Yeah, I hope that makes sense.
Jacob, that's a really good question. Right now, we're just focusing on the consumer, not on the developer. So our focus is the end user, and obviously, if they're buying tiny homes and then they can put those tiny homes on a developer's lot, paying rent, then we share a common interest of serving both end users, right? I mean, it's a win-win for the developer and also for the bank. So just keep in mind that's our focus.
Okay, perfect. Thank you.
Do you have any more questions on this topic?
Jeffrey Ball has a question.
Okay. With this type of financing, and the question kind of left me, but it may come back to me. That happens once in a while. Oh yes, now I remember. The different interest rates, can you recap on those again?
Yeah, we
Go ahead,
offer fixed rates and adjustable. On fixed rates, we have a 5, 7, and 10-year term. On the adjustable rates, we have a 10, 15, and 23-year term. Rates start at 9%, and they can go currently as high as 14%.
I see. So they start at 9%.
They do. This time last year, they started at 6.25%.
Now, is
So,
that included if there's a land home package, land/tiny home package? Is that still at 9%?
well, currently we're not doing the land home tiny home packages. We're working on one construction loan right now, but we have not opened that up to all the builders yet.
Correct. Because I remember you had spoke about that. That was kind of a probationary thing there. That
Right.
being said, is there any, and I know you can't predict interest rates, nobody can do that, but is there any hope that it will get close to that of traditional residential structures? You know, when interest rates lower for them back down to a sane level of 3%, 4%, what they were a year or two ago.
Well, tiny homes are not never going to be what residential mortgages are because they're consumer loans. They're always higher anyway. So will the rates go back down is going to be up to the government and how we vote. So keep that in mind when you go to vote. But the interest rates, from what I have read from different analysts, are supposed to go down, or they're predicting them to go down later this year or 2024. So the good thing about these loans, even though the rates are a little bit on the high side currently, there is not a prepayment penalty. So they can be refinanced, and we will refinance them if the customer wants us to. We can refinance them into a better rate at the bank because there's not a prepayment penalty. So even though they may not like what the rates are currently, we can, if the rates go down, definitely we want to take care of our customers.
Right, because the whole idea and concept of the tiny home phenomenon is to get the customer who's looking at either a $500,000 home in a questionable area of town, or go to the tiny home lower price, but then the higher interest rate. So I'm trying to find a happy medium and a good balance to sell the concept to the customer.
Yeah, affordability definitely is what the concept is. And I understand it's totally what you're saying about the interest rates, but unfortunately we don't get to control those. But again, this time last year, they started out at 6.25. So that's how much they went up this year. But should the government lower the prime, we definitely will too. We'll lower our rates.
Gotcha. Okay. I know it's something we can't hold our breath on, but we can hope for,
I can
I
tell
guess.
you though, I fight it. Every time they change, I fight it. I get very upset about it.
Right.
Jeffrey, one thing just to point out for you, like when you're talking to your customers, while the interest rate may be higher, the purchase price is lower. So when they compare it to like rent savings or something like that, actually the return on their invested capital is generally higher, because they might be outlaying a smaller amount of capital, but they're getting a bigger return versus kind of their opportunity cost of that money. So that's one thing. Yeah, people see the high interest rates, but when you sit back and do the math, you're actually better off because your monthly payment will be lower than typically your rent payment. So just something to think about.
Right. Makes sense. Makes sense. It's the generation we're looking at now. Most of them aren't having kids, and that's why the tiny home concept is even more elevated. In my excitement is I run into a lot of people because I do ministry where I'm at, and a lot of them are just telling me, no, it's just me, or just me and my fiance, or me and my wife, no kids. And so this wave, and I want to get on the top of it and ride it. It's just these little tiny things we have to work out. Again, interest rate versus what you just said, renting versus putting in a landlord's pocket. ROI, I guess, is a good point. That makes sense.
Hey, Jeff, a couple of other things as well to think about. These tiny home on wheels are not attached to real estate. So again, it's two separate transactions. There's the tiny home on wheels and then the real estate. So if they're looking for portability, they have that portability with the tiny home on wheels. If you're looking for a tiny home on real estate, that's more like an ADU, but that you're selling more real estate. The other thing is, and Robin can back me up on this, these tiny homes have appreciated in the last 2-3 years. I mean, they are appreciating with inflation. So they are gaining, they are appreciating. We don't anticipate that normally. Typically, RVs, cars, mobile homes, they would be depreciating, but the anomaly that we're running into right now, they're appreciating.
That's good
So,
news.
yeah, let me jump in on that, Jeffrey. One of the things about that I think would be a good sales point, especially comparing buying a tiny home to renting. Obviously, if you're renting, you're throwing your money out the window, you're not getting anything for that. But if you're buying a tiny home, number one, you're getting the appreciation of that. That is great. Number two, you can depreciate on your taxes. So it helps you out on your the whole tax idea. Number three, you're paying off that loan eventually. You will not have a payment. So there's a lot of benefits to going ahead and even though it may be a little bit higher interest rate, overall it's a lower payment than rent payment, and you're getting all of those other benefits that I just mentioned in that.
True. Okay, thank you.
So we've had a little bit of Valentine's, a little bit of Moses. Let's keep going on, shall we? Carolyn?
Tips to be a 5-star builder. The pessimist complains about the wind, the optimist expects it to change, and the realist adjusts the sail. Measure twice, cut once. Do what you say what you do. Cash and keys. Don't deliver the tiny home until the loan is closed and funded. Good to be great by Jim Collins. Definitely, I cannot express enough. Do not deliver the tiny home before it is closed and funded, because then you're giving too much control to the buyer. They could hold up closing by saying they're not satisfied with something that you have built. So I definitely would tell you never, ever, ever deliver a home until it's closed and funded.
And then this is one of my favorite books, Good to Great by Jim Collins. So I think it's just a good book for every 5-star builder. So that's it. That's the end of the presentation. I guess my question is, and I know that we've done this before. Jordan, do you have those questions? Are we going to bypass those questions? Do we have time for those questions by chance?
Apparently, Jordan, I don't think we're ready for that, Kendall, and we're kind of over time right now. You're talking about the survey questions?
Yeah, just survey questions, and we can send those out later. That's fine. I just was hoping to get a little bit more feedback, but Robin, is there anything else we need to cover?
No, I think we'll turn it back over to Leanne. She can kind of wrap things up. And we do want to thank you guys, both Carolyn and Kendall, both for your time here. And yeah, there's your contact information, and we're ready to go. Go ahead, George.
I have one quick question.
I was late.
Oh, Jacob. Okay.
How does repossession work? If somebody doesn't pay, you guys go get the house, right?
Correct.
And that's all you handle that. The builder doesn't have to deal with any of that, right?
We would handle that. That's correct.
Okay.
That's correct. We would rather keep the people in their home. It's not a fun experience for anyone. So we appreciate the question, and that's one of the reasons why we're doing what we're doing to make sure that we don't repossess any of the tiny homes. So it's easy to make a loan. It's harder to keep them in a loan. So we want to make sure it's affordable and it's a good win-win for everyone. Carolyn, did you have anything else?
I don't.
All
All right. Well, let's turn it back over to Leanne. Take us out.
Thank you, Kendall and Carolyn, so much for taking time out of your busy schedule to be with us. And we look forward to seeing you guys again soon. We're planning our grand finale, as you guys might, or hopefully you've heard by now. That's going to be Friday, starting at 2 p.m. Eastern. You can go to our website. A pop-up will pop up for you guys to sign up. It's going to be Friday 2 p.m. and Saturday 11 a.m. Those are both Eastern times. We've added a special bonus at the end of the grand finale on Saturday. It's a musical duo that you guys will really enjoy. So hopefully you can tune in Friday and Saturday. Also, when you tune in both days, you're going to be entered to win 7 nights in Cabo San Lucas at the Hacienda Del Mar. So that's pretty cool. Trying to figure out how I can get in someone's suitcase to join. Just kidding. If there's no more questions, we appreciate everyone saying thank you. Great info. Also, just to let you guys know, Carolyn's info is on our website as well. They're listed on our associate page. They're down at the bottom, Carolyn's direct number, as well as her email address. So with that, I think we're good to go. You guys have a super duper love Valentine's Day evening, and we'll catch you on the flip side. Thanks so much for joining us. We really appreciate it, you guys. Have a good night.
Bye, everyone.
Thank you. Thank you, guys.